Hello, thanks for joining me again. Something a bit different this week. I'm going to do the US futures live. As usual, we're going to start with the US dollar index. US dollar index closed lower this week on about average volume. Now, perhaps the most interesting thing to note on this chart is 2 weeks back, on an increase in volume, spread narrowed. Have a look how much spread there was on this bar, on this much volume down here. It's well above average there. This week, 2 weeks ago, spread narrowed in comparison on still above average volume, and the next bar was down. Selling pressures come in here for sure. Just how much selling pressure there'll be in this market is still uncertain, but some's come in for sure. Generally, the low of a powerful bar is where you want to watch, and that's here at the moment. So watch this level here. A break below that level would be significant in this market. You may see price just come down to this level and then rebound off it. But we'll just have to wait and see. Some supply has come into this market. It's been a while. It's been uptrending for quite a long time. Some supply has been drawn out, and we'll just have to see what sort of response there is over the next few weeks. The next chart is E-mini futures. This is the S&P 500 futures. Now, price has broken down in this chart a couple of times. You can see price breakdown here. The market was unable to regain the breakdown line. It came back down further. Price then moved up, but was unable to move back successfully above the breakdown line. Price moved back down to previous support, which was now here, and it's broke down again. Now, this isn't a significant breakdown, it's a reluctant breakdown. This over here is a proper breakdown bar, widespread, closes well below the line, down near its lows. You can see this is the breakdown bar here, and it's attempted to find support by closing up high. This next bar, this week's bar, closing lower but still within the range of the previous bar, it's a bit of a capitulation bar really, but price is holding on. It's held on within the range of the previous bar. Volume remained above average. We'll need to see what the response is here. A positive response would say the market is holding on. There should be some benefit from the weakness in the US dollar coming through, but not as much as some other associated markets. The fact that price did dip below the previous bar's low, but recovered, suggests there is still some strength in the market. So we'll just have to see what the response is. And the next chart is the US Treasury 10-year note futures. I always do this one following the E-mini because they sort of are inverse to each other. Now, this market's been trending lower for an extended period. You can see price has been pushing lower, stretching down like this. Now, the first two interesting bars came in about a month ago. That was these two bars. This was an attempt to support the market. There's little doubt about it. And price then dipped below this level, and it's formed a little reversal. This is the interesting level to watch here. And price has moved above it this week on slightly below average volume, so selling pressure was down. It probably received some help from the weakness in the US dollar overall. So this is the first significant attempt to support the market for some time. We'll just have to see how market goes from here. And the next level to watch is here. I reckon somewhere around 122.5. You might find that the market just moves up to this level but fails. We'll have to wait and see. But at this point, there is some minor support coming in. There's been an attempt over the last 5 weeks to offer some support to the market, and and we'll just have to see how strong that support is. And it may turn out that it really needs some ongoing weakness in the US dollar for it to actually perform positively over time, but we'll see. The next chart is copper price futures. Now, copper price futures were trending higher previously here, and then the strength in the US dollar came in very strongly, and this is a headwind for this market. You can see prices gap down here, which is effectively below this level. The levels are usually pretty good on this market. You can see how price works within those levels, holds on where it can. Prices come back up to this level this week. Any further weakness in the US dollar will see price move up like this, and strength in the US dollar will either see a test for supply or a push down lower to the next level. That's where this market is likely to be heading. The movement in the US dollar really affects this market. There's no doubt about it. Generally, when the US dollar is trending gently in one direction or another, these associated commodity markets, and the currency markets to some extent as well, are able to absorb the strength in the US dollar. But when the US dollar is moving up sharply, these markets can't absorb that amount of weakness all at once and are forced lower. And that's what's happened in this case. The strength in the US dollar over the last 4 or 5 weeks was really strong. It was accelerating higher, and this market was unable to absorb that and pushed lower in response. Okay, the next market is gold price futures. Gold price futures is probably the futures market with the highest percentage of retail traders. And because of that, lots of things go on to try to wrong foot and upset the retail traders. It's almost like the professionals in the market really enjoy playing with them. Okay, price broke below this level here that I just highlighted. That was an important level on the chart. You can see that price gapped below that level here. That shows that level is significant to the market. Prices come back to this level, found support, and with the weakness in the US dollar, price was able to move higher in response. I expect there will be some difficulty at this level. So if the US dollar continues to show weakness, you see price move up like this, but you may find price take some time before it can negotiate some sort of path back above this level, unless there was significant weakness emerge in the US dollar, which would then allow price to just blast through. That seems less than likely to me, but we'll see. Markets do anything. Okay, next market is silver price futures. Silver price futures have been acting weaker than gold for quite a long time. You can see price dipped below this pretty important level here. This was effectively a breakdown bar. Now, I won't be surprised to see the market have a little bit of a dance here before it can get through this breakdown line, unless, of course, the US dollar really tanks, which is unlikely, in which case it could blast straight through. You can see here there was a gap below this low here. This will be the next significant level of difficulty for this market. Once price gets above 22, I don't think there'll be a huge amount of difficulty to get up to 24, but I think there will be some difficulty at the 24 level before price could get through again. And in fact, there's probably going to be significant resistance from this congestion if price does get back above 24. Okay, next market is light crude futures. Light crude futures should have been receiving strong headwinds from the strength in the US dollar. But this market has been showing incredible strength really, and that's allowed price to continue higher. And look at all these tails where the market was being pushed down by the weakness caused by the US dollar, yet price has effectively absorbed all that weakness and consolidated strongly, and it's pushed back up to this line that I've marked as an important level. A break above this level would really be significant and probably see a new breakout, perhaps after a test. But I won't be surprised to see price dance around this level for a little while first before there's any serious attempt to break out. Once again, unless the US dollar really tanks, and then it will accelerate out quickly. If the US dollar goes down sharply, all these commodity markets are going to go higher, like they've been fired out of a cannon. But I don't expect the US dollar is going to roll over and head lower significantly. If anything, it'll trend lower gently. These markets will dance around like this, and then when it gets down to a significantly low level, will pop just above these areas of resistance and break out. Next chart is Aussie dollar currency futures have popped just back above previous support. At this point, you wouldn't call this a successful recovery back above previous support. It's an attempt to recover. The strength possibly came from, or was definitely aided by, the weakness in the US dollar. A successful recovery back above the breakdown line would be a significant move for this market. We'll just have to see over the next few weeks whether it will be successful in doing so. Generally, a clear breakdown will see price bang its head at the previous support and then continue lower. But I'm not sure that's going to happen here, and this wasn't a significant breakdown bar. You can see price closed well off its low, so there was an attempt to support the market. It was more likely that the strength in the US dollar really forced price down, and it's just taken a little while to absorb some of that strength before the market could pop back up again. Similar to those commodity markets I just mentioned. Last market is Bitcoin futures. Broke below this level, actually gapped below this level 2 weeks ago. It was a significant move. There'd been support coming into this market here. Weakness emerged here. There was a final attempt to support the market here, and price gapped below previous support and probably saw a reasonable proportion of the accumulated positions here dumped on this bar as price gapped down and actually pushed below this support. This should actually be fairly strong support in here, which is why the market eventually recovered it, as I suggested last week. The deep push below that level is a little bit of a concern. It may represent the fact that this accumulation that happened in here did get dumped, or at least a decent proportion of it, and that really forced price down before enough demand could come back to recover this line. We'll just have to see how it plays. Now, this week saw spread or range contract considerably. A serious contraction, one of the narrowest bars that I can see. Generally in response to a sharp contraction in spread or range like that, you will see an expansion in spread or range in one direction or another. This market's gap down here, so the suggestion would be it's going to try to break down like this. But that's not to say it will, because these really sharp contractions in range really never tell you which direction the move will be. It just generally tells you that after a sharp contraction in range, there'll be an expansion in response. generally within 1 or 2 bars. That's 1 or 2 weeks on this chart, but no direction. So I'd be looking for an expansion in range over the next week or two, and I'm a little concerned that because price gap down here, that's showing some intent. Price did recover back up to this support, so there was some demand emerge in the market that could allow price to push higher. So we'll just have to wait and see. But whenever price contracts considerably like that, and you can tell the market's hardly fallen on average volume as price moved back down. You can see it's moved up initially and then down. Price was in consolidation and absorption mode there. So the market's built up some strength for a little bit of a move. Let's just see where it goes. Okay, thanks for your time. I hope that some live commentary on the futures markets was interesting. Let me know in the comments if it was. Thanks for your time. See ya.